everybody. How y'all doing? I don't know what I just did. I was trying to get my phone together. So I had a bunch of thoughts in my head that I want to share. And I was about to sit down and get together some notes to talk about. You know what I'm saying? I was gonna get together some notes to talk about. And then a blue, code red, code 52, pimp down. Had to go handle that. So now I'm out to freestyle what I want to talk about. Let's go over here. Let me share my screen. I'm gonna get right into it. I ain't gonna hold y'all up much this morning. Let me pull up my thumbnail, and maybe that'll help me research the conversation I want to have in my head, because I didn't get a chance to make my notes. How did that get on that screen? I didn't get a chance to make my notes like I wanted to, because I had all kind of thoughts just swirling through my head while I was taking Junior to football practice. And let me this is what I want to talk about. Hey, you inspiring trader, do not risk one red cent until you watch this. All right. What inspired me to want to speak about such a topic? The fact that it goes in the vein with a lot of like why I actually backed away from doing daily videos. It's sort of in the same vein, but not quite. But let me see. Let's make some points off the top of the dome while we sit here. Let me create banner. Point one. Let me type this out. Why y'all don't judge me for my misspelling if I don't spell right? All right, point one. Why do I say don't risk one red cent until you watch this? I'm making these points off dome. I can't remember everything I wanted to talk about. Point one. Most of you will fail. This is part of the hard truth that most gurus and furus, the furus doing it on purpose. The furus doing it on purpose. The gurus are they're doing what a guru should do, as they gurus and mentors. They want to motivate you. They want to have positive motivation, no negative self-talk and all of that right there. So they're doing what they're supposed to do. They want to positively motivate you, right? Just like I positively motivate the Spider Gang, they want to positively motivate you. But part of the reason why I backed away from doing everyday videos is because as long as a teacher is willing to teach, a student will feel like there's something they need to learn. And sometimes people have to be pushed out of the nest, right? But the hard truth about being a trader, no matter if you're a day trader, swing trader, no matter what kind of trader you inspire to be, most of you will fail. Not because trading is just that hard. It's because we as people are too emotional. If there was a way to remove all emotions from humans and let them go into the market and trade with the emotional the emotional stance of a computer, everyone would be millionaires. I don't care how easy and sexy people make it look on Al Gore's internet. Most people fail at being traders, right? The hard truth about it is, and I know people, I have friends who just they feel like it's a necessity to call people out that make more money from their educational material than they do from actually trading. I'm not one of those people. I tell people all the time, if I decided to be like a trading educator, I would not trade while educating. Why? Because you need to focus as a trader. You need to focus on what you're doing. Any distraction can cost you dearly. So if I was a trading educator, I wouldn't be trading and teaching at the same time. So the people that's teaching you, a lot of them won't tell you this because they need you to buy their education. They're not going to tell you, hey, you probably going to fail, even with what I teach you. The stuff that I learned from ICT is the most accurate stuff I've ever seen in my life. And even with the ICT concepts, most of you will fail because of the human emotion part of it, right? Because of the human emotion part of it. So that's point one to why I say, hey, over there, inspiring trader. Yeah, you do not risk one red cent in the market until you watch this, right? Because most of you will fail. Point two. Let's think of a point two. Point two, most of you will fail. That's the harsh reality. The statistics prove it. The statistics are out there on how many people fail, how many people blow funded accounts, how many people, yada 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 yada. Right? Yada 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 yada. Speaking of blow funded accounts, let's talk about that. All right. Let's talk about that. Let me type up something real quick. Uh, it's just getting too long. That is way too long. Point two, don't try to get funded before being consistent. This goes into the vein of the issue that I had when I first started, and the issue that I hear a lot of people. I already know a lot of people got this issue right here, because whenever I'm talking to anybody about trading or anything, the first thing they ask me is, how much money do I need to start? I did the same thing. I did the same thing. You don't even know what a candlestick is. You don't even know how to do it. But you say, how much money do I need to get started? And why is that? Why is that? Why is that? That's another point I want to get onto. that part of it. I got to try to remember that to I got to try to remember that to come back to it. But because when it comes to trading, the first thing people think about is how much money you can make trading. Ooh, I could fire my boss. I can retire early. Shout out the fire movement, financial independence, retire early. I can do all this money I can make in the market. Oh, look at all these rich people from the market. I look on Al Gore's internet and I see all these people, 21-year-old millionaires, people look here, man. I call cap on a lot of this, right? Because I'm gonna tell you like this right here. When I was 21 years old, if I was a millionaire, I wouldn't have been in a little corner room in my parents' house live streaming, talk about I make millions of dollars in the stock market. Right? That's cap. That's cap. Now, if you are a 50-year-old millionaire, you might walk around with a t-shirt on like this right here. But a 21-year-old millionaire, 21-year-old millionaire gonna show off their money. You hear me? A 21-year-old millionaire is not. My kids are broke, and they will not get on Al Gore's internet without their freshest drip on. They got to have their freshest drip on their body. If you try to take a picture, if they gonna put their self on Al Gore's internet, you best believe they got their freshest drip on. So if it's some 21-year-old millionaires out there selling you a pipe dream, and they ain't showing off their drip and they money, I call cap. I call cap on the millionaire. But they're feeding into the idea of you can make all this money from the stock market. So then you feel like, man, if I had more money, I can make more money. So you rush out and you try to get funded. And the reason why the statistics of people blowing funded accounts, challenges, and people losing funded accounts once they get them is because they don't know how to trade consistently. They don't have a consistent strategy. They don't understand what they're doing. They get a sound bite from something that a person on Al Gore's internet said, and they go out and they try to use this sound bite and don't understand the whole totality of what that sound bite was a part of. And so they go out there, they YOLO trade. They think that if I get a funded account, I'm going to be rich. They don't even do the research to understand that no matter what size funded account you get, you don't have that entire amount of money at your disposal to trade with. So it's like so they go try to get the biggest funded account they can, and then they don't have the skill to even pass the evaluation. And if they are lucky enough to YOLO their way into passing the evaluation, they don't have the skill to even hold the account long enough to get one payout, or to just keep it over an amount of time, because they trying to do it before they are consistent. They trying to do it before they're consistent, right? This is gonna be all over the place and ain't in no particular order because I didn't get a chance to sit down and put my thoughts on paper. So I'm just speaking extemporaneous like I always do. Extemporaneously, I'm sorry, like I always do. Um, point three, more education won't make you a trader. I don't care how much learning you learn. Yep, I said it just like that. I don't care how much learning you learn. I don't care if you learn something from me. I don't care if you learn something from Michael Huddleston. I don't care if you learn something from Wall Street Trapper. I don't care if you learn something from Mark Monroe. I don't care if you learn something from PDub. I don't care if you learn something from Zay. I don't care if you learn something from Keek. I don't care if you Kiki. I don't care if you learn something from Jason Sweet and Jay the Trader. I don't care who you learn it from. I don't care if you learn it from Terry Ijiyama. I don't care who you learn it from. I don't care who you learn it from. More education won't make you a trader. The only thing that will make you a trader is trading. Trading is the only thing that will make you a trader. I don't care how good you can call these candlestick moves. I don't care how good you can see price. If you do not trade, you will not understand the emotional requirement to be a consistently profitable trader. I just did a live stream yesterday and I said, it sounds easy. I said something to the tune of it sound easy and it look good when we're sitting here reviewing this and we looking back over what we anticipated to happen with the candlesticks. And I was like, but it took a long time to play out. Would you have had the oomph-titude to sit through that? Would you have been able to watch your unrealized gains go up and come down and go up and come down and go up and come down? Would you have been able to sit through that? And 9.5 out of 10 people won't be able to do that because we're focused on, man, I'm gonna make all this money. I'm gonna leave this job. I'm gonna tell my boss to take this job and shove it. I'm gonna go buy me a Lambo. I'm gonna go buy me a Tesla Model X. I'm gonna go buy me some bling. I'm gonna buy me a new house. I'm buying whatever you want to buy, whatever. I'm gonna go on trips to Bali. I'm going on trips to Dubai. I'm going to trade and travel, baby. I'm going around. I'm gonna trade from the beach. Have me a hot spot and trade on the beach. That's all we think about. But more education ain't gonna make you a trader. Won't nothing make you a trader except trading, right? Won't nothing make you a trader except trading. Point four, speaking of, won't nothing make you a trader except trading. Point four, no matter what anyone says to you, do not go live, aka use real money in the market until you have perfected your model by sim trading until you have perfected your model by sim trading. Dude, no matter what anybody says, it's this, I don't know where it came from, but it's got to be the craziest thing I ever heard in my life, of people say, I got to put some skin in the game. I got to put some skin in the game. And I think I said it one time before on a live, right? When I was teaching my son how to drive, I took him to an empty parking lot and let him drive around an empty parking lot. I didn't take him and put him on the expressway, the main expressway in Columbus, Georgia, and say, you got to get some skin in the game. That's the equivalent of taking your real money and putting it in the market before you understand what you're doing. Why would you risk real money for something you don't know how to do? Right? I'm gonna tell you the truth on it. You can disagree. Yeah, it's okay for you to disagree. But the truth is, you're hoping in the back of your mind, you're saying, I got to get some skin in the game. But in the back of your mind, you're hoping that when you put this money in there, you hit a lick. And you're scared that if you sim trade it, you're scared you're going to hit a lick, but you can't spend that sim money. So you're hoping, okay, I'm going to put this money in here, and I'm going to put this money in here just to learn. But in the back of your mind, you're hoping that you hit a lick and you become one of those millionaires that you saw back in 2020 when GameStop, was it 2019, 2020, when GameStop was running up and these people was like over leveraging in these margin accounts, and they was becoming millionaires because GameStop was running up and they was over leveraging using the margin accounts to over leverage. And then they were lucky enough to get out and make millions of dollars. You're hoping to be that one that make millions of dollars just by putting a little bit of money in, because you hear all these people say, hey, let me show you how I turned $100 into 100,000. So you thinking, man, if they turned $100 into 100,000, if I put $5,000 in there, do not go live until you have perfected your model by sim trading. I don't care what you trade. I choose to trade ICT concepts because they're the most accurate that I've ever seen, right? But it don't matter what concepts you trade or what concepts you choose to use. If you don't execute, you won't make a dime. You can be the most advanced technical analyst in the world, but if you don't click that buy and sell button, you won't make a dime. All right. So before you click that buy and sell button with your own money, your live funds, you need to back test and perfect your model before putting live money in. Well, Tim, why do you say I need to do the why? What's wrong with putting skin in the game? Let me tell you what's wrong with putting skin in the game. When you put skin in the game up front before you know what you're doing, you're so focused on losing that money that you ignore all of the emotional triggers that's holding you back in your trading because you're so focused on the money. If you go in and you get lucky in the beginning and start winning, it's going to overinflate your ego and make you think that you're better than what you really are. I know it happened to me. If you start to lose in the beginning, it's gonna scare you, and your greed is gonna kick in, and you're not gonna want to lose it, and you're gonna revenge trade, you're gonna overtrade, you're gonna chase, and that leads nowhere but to destruction, right? But if you sim trade your model, if you learn your model, right? Then you go back and you sim trade your model, and you go through and you actually sim trade it. That will allow you, and you need to sim trade it for a long time. You want to sim trade your model in every possible market condition, every possible market condition, right? What are the possible market conditions? Trending up, trending down, and consolidating. You want to thoroughly understand your model in a bullish trend. You want to thoroughly understand your model in a bearish trend. You want to thoroughly understand your model in a consolidation. You want to know when your model performs the best. And once you know when your model performs the best, then and only then do you move into using live funds using your model. Because now that when you switch to live, the emotions are gonna be different, because now you got live capital on the line. But since you have thoroughly vetted your model, when you know how effective your model is in a bull market, how effective your model is in a bear market, how effective your model is in a consolidating market, you know how effective your model is in all these conditions. And okay, if your model is not effective in a consolidating market, and the market is consolidating, hey, it's not time for me to be trying to trade. But if you do not back test, and sim trade your model, because you back test to learn your model, you sim trade to learn how to use your model. All right. Point five. Do we got a point five? Do we have a point five? Let me see. Do we got a point five? Point five. What was I saying? Do not sim trade till you go live. I don't know if I'm gonna step on people's toes with this one, but I don't care. Call outs are shout out Bobby Boucher. Call outs are the devil. Shout out Bobby Boucher. My mama said call outs are the devil. Like Vicky Valancourt. Call outs are the devil. Why do you say that, Tim? Because if you're going off of somebody's call outs, you're not learning how to fish. You're depending on what somebody else thinks. Let me put it like this. You're risking your hard-earned money off of what somebody else thinks is going to happen, and you have no idea why. So if you're using call out services, you're gambling. You're just gambling. You taking your money and you're throwing it down on something solely because somebody else said so. I don't care how good they are. I don't care how accurate they are. That's that's why I personally don't even do call outs. I feel like I can have a call out service. I think I can. I think I can. I think I do pretty good at telling people where the market is going to go. I think I do pretty good at figuring out where the market is going to go for myself, and I do fairly good at taking trades that are successful. I know when I violate my rules, or when I jump in when I shouldn't. I know when I do these things. You know, sometimes my risk appetite boosts up, and Bob's your uncle. I get smacked around. Right? Call outs are the devil, man. Call outs are the devil. Look at it like this. Everything you need to know to be a successful trader can be learned for free on Al Gore's internet, right? Everything you need to know in order to enter into the market and buy and sell and use analysis, if you want to be a fundamental trader, and just base your stuff off of like quantitative data. You know what I'm saying? If you want to be a technical analyst and trade based off what the price action is saying, whatever you want to do, you can learn all of this stuff for free, right? All it takes is your time to sit down to understand it and not try to. Matter of fact, point six, point six. Stop, stop rushing. Stop rushing. We will go to work at our jobs for 30, 40 years, all right? And be content with bringing home a paycheck every 2 weeks or twice a month or every week, however you get paid. But as soon as we get into the stock market, we want to be retired in 3 months. We want to be retired in 3 months, right? And I want to clarify something, right? And I mean, no disrespect to Jason. I consider Jason to be a friend, but I did not, his course did not allow me to retire in 3 months. His course did not allow me to pay off my house. I retired in April and we paid off our house in June. I bought his course in October. I started taking it serious in January. I retired in April and we paid off our house in June. All of that didn't happen because of his course, right? I know you see the videos like of me giving him credit for giving me the missing piece. Yes, he gave me the missing piece of the puzzle. He taught me about futures. He did. I credit him for giving me the missing piece of the puzzle. I credit him for, what I'm saying, giving me the piece that I needed to beat the confidence. He gave me the confidence piece that, hey, I can I can use the market to make money at will, right? Because I had my ups and downs with options. You know what I'm saying? And long-term investing don't bring money like that when you're first starting out. The money is slow with the long-term investing. And I had a consistent paycheck, getting paid twice a month, and when I learned futures, I still to this day credit him for giving me the missing piece of the puzzle. But when you look at the sound bites that he's taken from me popping into his live streams and giving him a shout out, I unbeknownst to me, that these sound bites were being made into ads, I'm not mad about it. You know what I'm saying? I'm not mad about it because it's nothing that's not true that's being said. I learned how to trade futures from him. I retired while I was in his trade room. All of that's true. But I don't want you to misconstrue the timeline thinking that you need to try to rush it because, hey, Tim, you bought a course in October. You started taking it serious in January. You retired in April. You paid off your house in June. No, 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 no. And I've told this many times. My wife and I had a plan. We had a plan. We put together a plan. Trading and investing was nowhere in our plan. We put together a plan for me to retire first, and then for her to retire afterwards. That's why she's still working now, because the plan has not fully played out. It just so happens I was supposed to be sitting on Al Gore's internet with you all, teaching you about video and photography while I was shooting wedding videos and commercials and commercial spots for businesses and stuff like that. I was a photographer and a videographer, primarily a videographer. That was supposed to be what I was going to do after leaving my 9 to 5. Came across, started really getting serious about the stock market in 2020 and learned about futures, options, then learned about futures. And then I was like, hey, this is what I don't have to do no manual labor to, take care of my family. But our plan was in place for like 3-4 years before I even started to know anything about futures. By the time I learned about futures, it might have been about 5-6 years before I got to futures. You know what I'm saying? Because when I tell the story, I always be like 4 years, but I've been telling this story for a long time. So it's like, and then people be like, well, so yes, trading and investing did, help pay off my house, but it wasn't in the timeline that a lot of those ads make it seem like. So don't rush. Don't rush. Don't rush. It's not a sprint. It's a marathon. Don't rush. Please don't rush. Again, you want to know your model in every market condition. You want to know your model in a bull trend, a bear trend, and consolidation. That's all the market gonna do. It's gonna go up, it's gonna go down, it's gonna go sideways. That's all it can do. So you want to know how your model works in all of those conditions. The only way to know how your model works in all of those conditions is to sim trade it. If you do not have, let me tell you like this. If you do not have a platform that allows you to download the data, right? That allows you to download the data and trade it real time with the downloaded data, right? You will need to sim trade in the live market for at least a year. You would need to sim trade for at least a year before you are truly ready to even think about risking real money in a live account. Why do I say that? Because over the course of a year, you will get the opportunity to see a vast array of market conditions. The market moves seasonally. Every year is not going to be identical. There's going to be similarities throughout the year, but every year will not be identical. But if you sim trade for an entire year, you will get a chance to see how the market performs in quarter one, quarter two, quarter three, quarter four, right? You will get a chance to see how the market performs through all of these quarters, right? The problem is a lot of us that's around now, a lot of people that's on my channel, a lot of people that's trying to become interested in trading got introduced to it in 2020 when the market did nothing but go straight up. After April 2020, from the end of March 2020, the market just went straight up until August 2021. It just went straight up from April 2020 to like August 2021. The market just went straight up. But now you're starting to see more diversity in the market. So don't rush. Don't rush the process. Take your time. Learn it by back testing, figuring it out, seeing how it play out, and then sim trade it in all conditions so that you know how effective it is in all of these conditions. Do we have another point? Can we have a 0.7? Do we have a 0.7? Do we have a 0.7? Said don't rush. Call outs the devil. Let's go back and look. 0.1, well, most of you will fail. That's true. Most of us will fail. Don't try to get funded. Yes, that's true. More education won't make you a trader. Yep. Yep. Until, yes, that call outs are the devil. Don't rush. Is there anything else I want to share? We've been on here 42 minutes. Is there anything else I want to share? I'm thinking. Let me look at, see if anybody's saying anything in the chat, and then I'll see if we want to make a 0.7. Let me say good morning to my people. Good morning here, Learning Share. Good morning, Rhonda. What's going on? Yes, they are. The birds are chirping. What's up, Deborah? What's going on, Seawalk? What's up, Michelle? What's going on, somebody's mother? What's up, Mendez? What's up, Finder Superman? Buenos dias, Valdez. Buenos dias. What's up, Sonya? What's going on, Sanjay? Everyone thinks that they're the one trade away from it. Exactly. No. What's up, CZ? Good morning, baby. Good morning, Angela. Let's have a 0.7, man. I don't know. I don't know if I have a 0.7. I don't have a 0.7. I don't have a point. Oh, you know what? Come on. This is what. Let's go right here. 0.7. Let's do this right here. Slow and steady wins the race. 0.7. Slow and steady wins the race. Right? Since we'll talk about trying to get funded, and one of them, which one was talking about trying to get funded? Number 2, we'll talk about don't try to get funded. Number 7, I'm gonna say slow and steady wins the race, right? What I mean by that, if you are consistent, if you've come to the point where you are consistent, right? You can take a small amount of money, right? And just grow it over time. Is it going to allow you to quit your job in 3 months? Nah, it's not. It's not, right? You can take $1,500, put it in a brokerage account using somebody like Ninja Trader. I prefer Ninja Trader as my discount broker of choice for trading. You can any other discount broker that you choose to use, you can take it, and then you can trade the micro e-mini, and you can trade that, or the micro NASDAQ. You know what I'm saying? You can trade that and slowly grow that. Just get $1,500 and just slowly grow that. You know what I'm saying? Trading 1 or 2 contracts at a time, right? And just slowly grow it. Now, mind you, it's not going to be a whole lot of money that you're making, but you're just slowly growing it. And once you get it to the point where you can take on the risk of trading a mini contract, then the money will start to be more money, but you're slowly growing it. You're not going to over leverage. Slow and steady wins the race. If you're in the mind frame of, okay, I want to use trading as a supplement to my income, but I don't want to risk any of my personal capital, then you can go the route of trying to get funded. But here's the thing. Do not try to use the funded accounts to get rich. Do not go out here and go for these large funded accounts thinking, oh, if I go get funded for $250,000, I can do this. And no. Slow and steady wins the race. Shoot for $25,000 accounts, $50,000. If you haven't been trading for 10 years, you shouldn't even be trying to shoot for huge, large accounts. Take it from me, my own personal experience, right? Going out there trying to get multiple $250,000 accounts, the amount, the journey you have to go to just pass it, it is grueling unless you're over leveraging, right? It's grueling and this me being honest, like trying to get to the threshold to pass a $250,000 account without over leveraging. It starts to weigh on you mentally. It's like, man, I'm never going to do this. I suck. It's taking so freaking long. If you're doing it the right way, it's taking so freaking long. You think, oh yeah, I can do it in 10 days, until you realize it's time to renew the subscription again, because I didn't have enough good trading days and my model didn't set up enough for me to make this amount of money without over leveraging. And now it's time to renew again. And then you have to think about it and be like, you know what? Let me go down here and get these small accounts that I can hit within this amount of time. Let me go down here and do these smaller accounts. And then you realize slow and steady always wins the race. Slow and steady always wins the race. Then you realize I don't need this larger, I'm just trying to get this large amount of money so that I can feel good about being a 7-figure funded trader. Who freaking cares how many figures funded you are? Are you making money? Are you blowing accounts? Are you stressed out trying to get that? Slow and steady wins the race. Don't go out there trying to get these large accounts, right? Because if you go try to get these large accounts to do it properly, right? To do it properly, in the market conditions we're in now, right? If we're in trending markets and it's just running all day long, it can be done. It can be done. But in these markets that we're in now, where we'll trend for a day or two, then come back down and chop and all this high resistance liquidity runs, those you think about, oh, it's just 10 days. You don't know how quick that 10 days turn into, that 10 trading days turn into 30 calendar days. It turned into 30 calendar days quick. And don't throw some holidays in there when you can't trade because the market is closed. Those 10 trading days turn into 30 days quick, 30 calendar days quick. And now it's renewing. And now you're starting to feel stupid because you see your favorite guru on YouTube saying how they passed the challenge in 2 days. They're not telling you they was over leveraging. You're over here trying to do it the right way because you don't want, whatever you do to pass the challenge, that's what you're going to do in your funded account. So you're trying to do it the right way, and you're trying not to over leverage, because I don't care what you say. People can say all day long, oh yeah, when I'm trading on the evaluation, I just YOLO out. But when I get funded, I don't, whatever you do to get that evaluation passed, that's what you're going to keep doing in your funded account. That's why so many people blow their funded accounts. So that's point 7. Slow and steady wins the race. I think that's all I got. I've been on here for 52 minutes. With that being said, let's go look and see what the market is doing this morning. Shout out anybody who's in the Spider gang. I shared my charts last night. Said, hey, these are the PD arrays that I'm watching for overnight price action. As you see, overnight until the news, we sat on top of, until the news candle right here at 8:30. These are 15-minute candles. Until the news here that came down to the sell side that I was watching, right? We sat on top of this 15-minute bullish breaker all night. That 15-minute bullish breaker right there that I said, these are the PD arrays I'm watching. Had a 15-minute bullish breaker there. Had the sell side that I was watching there. Had a 15-minute SIBI above price. And this was the daily order block that had been sitting down there for a while. And then I also noted that we had a daily order block. I put a question mark there because I want to see if price came down there, if we treated it as an order block. Let me show you what the candle looked like. The reason why I had the question mark there, because it's just this up close count. I mean, this down close counter right here. We had the we took off and we were delivering to the upside, right? Then we had, you know, a change in the state of delivery coming back down, and then we broke through that high right there. I want to see if when we broke through that open right there, I want to see if we were going to use that as a bullish order block. I might have said bearish. That's why I had the question mark next to it, right? Want to see if price was going to use that as a bullish order block. But everything else was clear cut. Had a 15-minute breaker there. This is I can't remember who I was talking to the other day. I can't remember if it was Rhonda or Michelle, somebody I was talking to, and I was like, whenever we have two breakers, right, that price is coming down to, I always give more weight to the first breaker that it reaches, right? And this is what I was talking about right here, right? We had this breaker here. We got a low, a high, a lower low traded through. Then we got this breaker here, a low, a high, a lower low, and then we traded through, right? This is the breaker that price came back to first. So I always give more weight to the first breaker that price gets to. You know what I'm saying? I give more weight to the first breaker that price gets to. And this right here is the entire breaker there. And if you notice, where did price come to? Can somebody tell me where price came down to right here? Somebody put it in the chat. Where did price come down to here? Right? Can someone put in the chat where price came down to right here when we came down? When I said I always give priority to the first break. So we came to this breaker first. This is the second breaker. This is the area down here. When I call this the downside risk, because there's an imbalance. But since we had sell side delivery, we had buy side delivery, I'm not expecting price to want to come back down past this down close candle right here. Why is that? Because when we're in a buy program, not discount, related to the breaker, where did price come to related to the breaker? I was talking about I gave priority to the first breaker and then the second breaker, right? When price is in a buy program, what did we say yesterday about the down close candles, right? We said down close candles should do what? Right. And I'm still waiting on somebody to tell me where price came to. I already gave you the clue right there. I put the Fibonacci's on there. Where did price come back down to right here? Right. Not related to the breaker. Specifically related to the break. No, if it was a gap, that would be correct. What do you call it in a breaker? What do you call it in a breaker? If it was a gap, this would be correct. But what do you call it inside a breaker, inside a order block, inside a mitigation block, inside a propulsion block, mean threshold? There you go. Price came down to the mean threshold of that breaker, right? And what do you notice about the mean threshold of this breaker? Price left an order block right there. It left an order block right there. Right? Who remembers what ICT said about market maker buy models and market maker sell models when you have opposing order blocks? Who remembers what ICT said about when you got opposing order blocks when there's a market maker buy model or a market maker sell model, right? This right here is a market maker buy model right there, right? Who remembers what ICT said about opposing order blocks when it comes to market maker buy models? Does anybody remember what ICT said about opposing? What's the name? Here's your clue right here to the answer, right? If you look over here on this side right here, this breaker was once a bearish order. Come back to them and use them on the opposite side as an entry right there. Very good here to learn share. Use it. Bearish order block, bullish order block on the market maker buy model. Once we trade past this bullish order block, when price come back down to it, that's a possible entry, a highly probable entry, should I say. And so coming back to, it's all kind of ways to skin a cat if you understand the concepts. But coming back to in the buy model, right? Once we've left this balanced price range, because we had sell side delivery, buy side delivery, we don't expect price to come back down past this down close candle. Why? Because down close candles are supposed to support price. Down close candles are supposed to support price in a buy model, right? So I know you looking saying, Tim, well, we went past down close candles and all of this right here, but it's all about time and price. Time and price, right? Time and price. So throughout all of this consolidation right here, right? Throughout all of this consolidation, if you really go back and look through all of this right here, right? If you really go back and look through all this consolidation, when you go from this down close and when we come here, when we had this we was going up and we came down and took out this sell side right there. Once we came down and took out this sell side, if you really look at it, price was respecting all of these down close candles. See, we never came back. It was keeping price up. And then when we started, and then we came down here to the news, and they used the news to come down to where? The sell side, took out the sell side. Once the sell side was taken out, we stopped where? At the order block right there, inside mean threshold, at mean threshold of the breaker, and then push back up. Now we've just got up here into the rejection block, and we're still pushing up, right? So the buy program was still intact. It came back, hit that down close candle, and went back up, right? Had all this down here just to be aware, hey, it can possibly come down to this, but you don't want to see it come below that down close candle right there. Once it take that sell side, that down close candle should support price, and it did, and it went back up. Once it passed the opposing side, high probable entry. Exactly. I really hadn't planned on looking at the charts, but since y'all stuck around with me to listen to me babble about, hey, you, yeah, expiring trader, do not risk one red cent until you watch this. I just say, hey, let's peek at the chart since y'all stuck around to hear me babble. I appreciate y'all, man. That's all I got. Do anybody have anything for me? Do anybody have anything for me before I go? We've been on here for an hour. Does anybody have anything for me before we go? You're welcome. Thank you. You're welcome. Well, with that, I don't see nothing else in the chat. So I'm going to go ahead and call it again. I appreciate y'all. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so you can go back and study the things that you saw today in the price action, and then execute. Big Spider, gone.